Hello, everyone, and welcome back to my YouTube channel. Today, I have a very special guest. I'm doing something a little bit different than what I have typically done on this channel, but I have a close friend of mine, Jonathan Esposito. Jonathan is the founder and CEO of Rize Mortgage. For those of you who are pretty up to date on my channel, you'll know that recently I have gotten back into the real estate industry. Jonathan is a longtime friend, and he is a growing name, and his mortgage company is on the rise in the real estate industry, no pun intended. And so today I have the opportunity to talk with him, with you guys, to learn about the mortgage process, learn about specifically VA loans, and also get his take on what's going on in the real estate market. So without further ado, Jonathan, welcome to my YouTube channel. I'm not sure if we are able to hear you. It says that you have muted yourself. Go ahead and
Can you hear me now?
yeah, there you go.
Ah, sorry about that. Well, thanks so much for having me. Really appreciate it. Looking forward to diving into such a great topic and VA loans and helping people out.
Absolutely. We're honored to have you. To start off, let's talk about your personal and professional background. Now, obviously, I know you, but those people who are watching, they may or may not. And so, for those who do not know you, can you tell us a little bit about yourself and your journey to founding Rise Mortgage?
Yeah, so born and raised in West Hartford, Connecticut. Um, Went to Duffy, then Sedgwick, then Conard High School, all local public high schools, and was fortunate enough to get accepted into Princeton University, which is obviously where I met you. Played football there for all 4 years. And then after graduating, went on to going into the tech startup world, which was extremely fascinating. First company I started at was probably like 60 or 70 people when I joined. Got to see that grow to like 200 plus, and then got recruited over to actually be the first sales development rep at the at the company. It was called Vettery. Maybe total we had 10 to 15 people at the time, and grew that to well over 200, and saw a very successful exit. Worked with some of the smartest people that I've ever had the pleasure of working with, and it was after that I got approached during COVID with two people that I used to work with. Who went on to work at a mortgage company. They both reached out to me and were like, "Hey, I think based on your background and you're interested in real estate investing, which I started to do throughout the years, I think that the mortgage industry could be a very interesting one for you." And I was like, mortgages? Like, what? No way. I'm in tech right now. There's no way I'm going to make the transition over to mortgages. But they encouraged me to have the conversation, and obviously I'm glad I did because it ended up checking all of the boxes. And has been a phenomenal fit. So it's now been almost 4 years since being in the industry, and I launched Rise 2 years ago.
So, you talk about that conversation that you had with some of your, um, you know, I don't know, friends and mentors. What was it
Yeah,
about those conversations that inspired you to actually, jump into the mortgage
yeah,
industry?
yeah. Great question. Um, so the way that they even got me to entertain the conversation was like, listen, if it's not the right fit for you, at the very least, we'll be able to help you with your personal mortgages, right? So I said, okay, there's nothing to lose, right? It'll take 30 minutes. Best case scenario could be something that changed my life. Worst case scenario, I'll have somebody that'll take care of me on my personal deals. So I had the 30-minute conversation and then started reflecting very heavily on my career trajectory. And ultimately, what it came down to is the the tech industry is an awesome one. Obviously, like tech has changed all of our lives, and it's continuing to evolve. And it's so fascinating. But ultimately, working at a startup in a really high paced environment, the chances of success, as you know, of either getting acquired or going public, there's like a 99.9% failure rate. And so what I started to think about was, okay, well, in the mortgage industry in particular, and a few others, but the mortgage industry is really nice where you have the opportunity to build upon your success and build upon your relationships. It's not as transactional, right? So like right now, I've partnered with a lot of great real estate agents. I've partnered with a lot of great investors, and we've continued to grow together. And that's what I really liked. Where on the tech side, it was very transactional. Next deal, next deal, next deal, next deal, next deal. We got to grow revs, grow revs. Which obviously in any business you want to continue to grow and scale. But what I loved about this role in particular is that you could continue to work with others to grow and scale your business. So that's what it ultimately came down to.
Yeah, that adds up with, what I know of you just given our time in college together. I felt like you were always one of those connectors, like someone who was really good at bringing people together, always just
Thank
bringing
you.
good energy. And so that really adds up. I want to
Thank
transition now into talking about, sort of the basics of the mortgage industry and the home buying process, for myself and for my audience. And, sort of my ideal client is, someone who is, maybe E5, E6 and above. Maybe it's their first home that they're trying to buy. And so I really want to,
you. Of
talk to us at like a fifth grade level, if you will. For
course.
first time buyers, what's the most important thing to know before applying for a mortgage?
Yeah, I would say it is to have the conversation sooner rather than later. I think a lot of people get overwhelmed by the thought of buying a home and getting a mortgage, and they may not think that they have all of their ducks in a row in order to do so. However, you just never know, and it's always better to have that conversation sooner rather than later, even if you don't think that you'll be buying for 6 months, a year, 2 years. It's okay. It really is. Have that conversation. That way, if you are not in a position where you could buy right now, whether it be for a credit score or debts or something income related, it's okay. At least you know that now, and we could work on that together now, right? Like there are things that we could do if your credit isn't in a position to buy right now. We could work together, and there are ways that we could coach you or introduce you to people who could coach you to turn that around to get you in a position to buy when the time is right. So just have the conversation now. Don't get overwhelmed by it. Just the more knowledge is power, right? And the more you learn sooner rather than later, the better position you'll be, when the time is right.
Absolutely. And can you walk us through sort of the mortgage approval process, from start to finish?
Yeah, of course. And it's pretty simple, right? So the first thing is you go through and we have you complete a mortgage application. You can either do that on your own time or we could do it together with you. But it'll go through, it'll ask you about your living history, your employment history, some asset questions, demographic questions, declaration questions. So there's 5 or 6 sections that we'll go through. It takes like no more than 10 to 15 minutes to go in and fill everything out. Once everything is filled out, you'll then be asked to upload all of your supporting documents. So, pay stubs, W 2s, driver's license, bank statements, or if you're self employed, they'll need your tax returns. And obviously, if you're a veteran, we'll need your certificate of eligibility, DD 214, things like that. And then we'll go through. Our internal underwriters will dot all of the I's, cross all of the T's to see exactly how much you're qualified for, and we'll compare it to how much you're comfortable spending. Just because you're qualified for $1 million house doesn't mean you want to have a $10,000 payment a month, right? And so we'll have that conversation with you to know what you're qualified for, what your comfort zone is, and then that way they could go and work with their realtor to find homes that check all their boxes, and then the ball will get kicked back in our court, to obviously bring you to the closing table and bring the money to the table and help you fund. But it really just starts off with the application, uploading some documents and then having a conversation to know, where you stand and where you want to be. And then the fun begins. Then you get to work with your realtor to find that dream home.
That is definitely the part they enjoy the most. And from my own experience, the mortgage process can be really stressful on buyers. A lot of people may not even know their own finances well enough until they actually sit down with a lender. And so, what are some of the biggest mistakes that you see buyers make when applying for a mortgage?
Yeah, I mean, we're on the same team, right? We're all trying to work together to help you get into your dream home in a position where you're comfortable to do so. And so sometimes um, the biggest mistake is just holding things back, right? And it's not always intentional, right? It might be, oh my God, my car broke down, so I had to get a new one, right? Or, oh, I changed jobs. And so there are things like that. Like, let us know if your income scenario changes and in your employment, or if anything on your from your credit perspective changes. If you open up a new line of credit, you buy a car, you open up a new credit card, to finance something, right? Let us know because it may not always be a bad thing, right?
Mm.
But it's important to know because some things change underwriting guidelines, right? If you go from a W-2 salary job to a to an hourly position, once again, it may not completely change things. It may not change your eligibility, but it might. And that's why always communicating with us and any changes on the back end, that'll prevent any issues down the road, right?
Yeah. Yeah. So it sounds like just transparency and really having that line of communication. And maybe there's a circumstance where people are hesitant to say something, like you said, maybe their
Mm-hmm.
car broke down and so they had to get a new car. But maybe if they are able to explain these things to a lender, maybe it doesn't
Yep,
hurt them as much as they may think.
exactly, exactly. So that's why, like you said, transparency, and we're like I said before, we're all on the same team, and just keeping that open line of communication is super important.
Perfect. I want to transition now to talking, a little bit more about VA loans and military home
Hmm.
buyers specifically.
Yeah. Yep.
Many of my clients are military families. So, what makes a VA loan different from a conventional loan?
Yeah, I mean it's one of the best loans out there, for the buyers, and obviously well deserved. And thank you, Eduardo, and thank you all to all your listeners, and in advance to all of your clients for your service. Right, it is so greatly appreciated, and you guys deserve to have the best loan program out there. So some of the key differences is you'll have the best rate, right? There's no PMI if you put down less than 20%. And in fact, you could put down 0%, right? There's no debt to income ratio restrictions like a conventional loan, and no FICO restrictions. So those are like 4 or 5 of some of the biggest benefits. But overall, it is a phenomenal product. Once again, well deservingly so. Of
Well, thank you for your kind words, and I'm sure the listeners
course.
feel the same. What are some misconceptions people have about the VA loan?
Oh, misconceptions. So I think from the buyer's perspective, they hear the 0% down and they think, great, I need no money out of pocket in order to buy a home, which is necessarily not necessarily true. So there's 3 aspects to kind of the closing costs and the cost in buying a home. There's the down payment, there is the funding fee, and then there's the other, general closing costs, appraisal, um, title fees, attorney fees, taxes, homeowners insurance policy, county recording fees, things like that, transfer taxes, depending on what state you're in. So the 0% down covers the down payment, right? A conventional loan needs minimum 3% down for a first time home buyer. FHA requires 3.5% down. So that part is truly 0%. So is the funding fee, right? You could finance your funding fee. That being said, the other closing costs, unless you get a seller concession, those are not looped into the loan. So I think it's important to know that you will have to bring some money out of pocket unless you get a seller concession and you negotiate that as a part of your deal to cover your closing costs. So I'd say that's probably the biggest kind of misconception for buyers. And then I'd say from realtors or the listing agent, one is that it takes longer to close, right? I hear that sometimes, which is not true, right? We close VA loans personally just as fast as we do an FHA loan, a conventional loan, or any other type of loan. And then the other kind of misconception, which is a little true, is that there's a lot more restrictions. And I wouldn't say there's a ton. There are a few, right? Like the appraisal, they look at it a little more closely, and the guidelines aren't as loose as a conventional loan. There's a pest inspection that's completed, right, for like wood destroying pests. So there are a few nuances, but at the end of the day, they're there to protect our veteran, and they're really important. But overall, like I said before, it is a phenomenal program for our veterans.
How can military members set themselves up for success when using the VA loan?
Yeah, I think, it goes back to what I said before of just like overall mortgage suggestions is have the conversation sooner rather than later. To know how much you're qualified for, to know how much of your own money you may need to bring to the table. Those are things, for the closing costs, as we described before. Those are the conversations that you want to have sooner rather than later, and that way you could plan accordingly, right? Whether it's saving up or whether it's just knowing that you and your realtor are going to have to ask for a seller concession if saving up right now just isn't realistic. But once again, those are the conversations that you want to have right now.
Are there any new policies or changes to the VA loan policy that buyers should know about?
Yeah, so that's a good question. At the end of last year, they actually changed it. And don't quote me, I think it was in August of last year. Don't quote me on that. But towards the end of last year, the VA now allows the veteran to pay for the buyer's the buyer's agent, right? So their real estate agent representing them, they allow them to pay for their commission if they wanted to, right? In some markets where it's very competitive, right, especially after kind of the NAR settlement, it may not be negotiated in, and the seller may not be willing to pay for the buyer's commission. Prior to this recent change, it was not allowed. The veteran was not allowed on a VA loan to pay for the buyer's commission. Now they could, right? So once again, ideally they won't have to. Ideally, that's something that you can negotiate for the seller, to cover for you. But if it is a scenario where they do have a lot of money saved up and it's their absolute dream home, um, they the veteran could elect to pay for their buyer's agent's commission.
I want to shift now to talking a little bit more about the market and different trends
Okay.
you're seeing. And
Yeah.
everyone is talking about and wants to know about interest rates, right? It's all over the
Yeah.
news. You can't turn
Yeah.
on any financial media without hearing something
Yeah.
about interest rates. Um,
Right. Right.
what's going on with mortgage rates right now, and where do you see them heading in 2025 with your crystal ball?
Yeah, I mean, we'll see. Obviously, President Trump just came out with some new tariffs, and those have come into effect, which has caused a lot of volatility in the market. Stocks have gotten hit pretty hard. Bonds have performed pretty well. And fortunately for us on the mortgage side, um, mortgages are bonds, right? They're mortgage-backed securities. So when the bond market is performing well, so are rates. So we've seen a little drop in rates over the past couple weeks. Yeah, I think like the past 3 weeks, we've seen a nice little drop. So which is nice, right? They were rewind a year ago, mid to high sevens. Then they peaked down a little bit for, towards the end of the year. Then they popped up a little bit, and now they're starting to creep back down. National average, and not for VA loans in particular, but for conventional loans, national averages right now are mid sixes, which we haven't had in a while. So we are seeing a little bit of a drop. We'll see what happens, obviously, with the new administration and what everything is going on. Right now, just globally. But we fortunately recently we've have seen a nice little tick down. I mean, mortgage applications have hit a recent high, so we are definitely seeing people come back in wanting to get pre-approved now that things, they perceive them as being a little bit more affordable with lower rates, or also if they've closed within the past year, they might be in a position to refinance.
How do interest rates impact affordability, and what should buyers consider before locking in a rate?
Yeah, so I mean, rates definitely have a major impact on affordability. The lower the rate is, and the lower the payment is, the more they could afford. And so that's why, when things kind of spiked over the past 2 years or so, people, 2 to 3 years, people have gotten nervous because it's kind of kicked them out of being able to afford certain payments. So I think right now, we're in a position where we're starting to see things come down, and it's important to run their numbers and have that conversation. Right now might be the perfect time to go in and buy. Who knows? Of course, right? Things might get worse or things could turn around for the better. No one really knows what's going to happen when rates go down. If they go down because of a heavy recession, right? Um, Obviously, that might change things, but generally speaking, if rates tick down a little bit, and there's not massive fear in the economy, and they drop more of inflation cooling versus like job and employment cooling, right? But if they do come down, a lot of people think that buyers are going to rush into the market, right? And they're going to be like, finally, rates are at 4%, and we're in a position to buy because things are much cheaper. I didn't want to, go in at 6 or 7%. Now they're 4 or 5. I want to hop in. So that's why right now could be a very good time to buy, because if you get in prior to rates dropping, right? So then the concern of, if a lot of buyers flood the market, then it's going to drive up the price, right? Because everyone's going in now. There's a bidding war, and it kind of negates the whole, oh well, I waited for rates to drop, but now home prices have gone up. So that's why now could be a really good time to get in there, have those conversations. And they always say, marry the rate, or sorry, marry the house, date the rate. That means, if you love the house and you're able to get it now, but rates are mid sixes, but things turn around and rates drop into the fives or into the fours, great. Then you could refinance without having the price of the home go up as well, right? You're locked into the lower home price and you're locked into the lower rate. So once again, nobody will knows why rates will drop. Whether, like I said, if it's going to be just because inflation is cooling, or if it's because of like a recession and employment dropping and jobs dropping. But if it's not because of the latter, then it now could be a really nice time to buy.
Yeah, you kind of already must have been reading my mind because you answered my next question, and I'm sure you get asked this all the time, and I think I'm going to ask it directly just for the viewers out there.
Yeah.
Is now a good time to buy, or should buyers wait for better conditions?
Once again, like I said, I wish I had that crystal ball that you referenced before. um, but I think that you are if you're confident that you have a stable job, right? And God forbid if there is a little bit of a recession or a pullback, and you're still confident that your employment will be safe, I think now is a phenomenal time to buy.
Yeah, well,
On the
that's
other
great for
hand,
our viewers because we're military,
right,
so
exactly. Correct. Correct. So
yeah.
that's why for military, and that's one of the most stable. Exactly right. So for military, yes, now could be a phenomenal time. Like I said before, if rates drop drastically and there's not a big recession, there are a lot of buyers who have been sitting on the sideline waiting for rates to cool down before getting in, right? And they've been preserving cash and waiting for the time to then go and put down a lot of money and potentially drive up prices. So right now, if you are confident that you have a stable job, it now could be a very, very, very good time to buy.
And I want all the listeners to know out there. Now, obviously, I'm licensed in the state of Virginia, but Jonathan and Rize are able to do business across the country. And so it doesn't matter where you are. You guys, I have his company's information in the description below. And I will also, as soon as we end this, update the description and add your email so that you guys can reach out to Jonathan with any questions that you guys may have. But he is able to practice business across the United States. And I want to jump into a transition now to talking about loan programs and financial advice, which
Hmm.
obviously nothing in this is financial advice, right? But
Right,
none of us,
right, right,
we are
right.
not financial advisors. But let's just talk about, you know, sort of pontificating here. But what are some loan options beyond conventional and VA loans that buyers might want to consider?
Yeah. So I'm a broker. Okay. I'm not a direct lender. I don't work at a retail bank. I'm a broker, which means that I'm partnered with dozens of lenders who help with all different types of loan types, right? Or in almost every single different type of loan. And so we could go in and when having that initial conversation, when looking at your application, when looking at your financials, when looking at your the assets that you have saved, we'll go through and also depending on your market, right? Like I helped a buyer who a little over a year ago now in Connecticut, really, 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 really hot market, and he just couldn't get over the hurdle, unfortunately, of being able to compete for a house with a VA loan. Just because of like appraisal restrictions and inspection restrictions. And although he wanted it, obviously, he had a lot of money to put down. So he was able to put down 20% and was able to waive a lot of the mortgage contingency and inspection contingencies and cover appraisal gaps, so he was able to do some things that you're not necessarily able to do on a VA loan. And so he got into the house, right? He got his offer accepted, and actually right now we are working on his refinance into a VA loan. So it's been a little over a year. We've seen rates drop very nicely. We're able to save almost a percent and a half from where we were, right? We just locked them in high fives and or mid fives actually, 5.625. We just locked them in. And so yeah, so now he's converting over. So that's why those are things that we'll be able to cover of like, okay, depending on your market, and if it's super competitive and you find your dream home and we don't think that VA will get accepted, we could have conversations about other loan programs that we could use right now and then refinance out of in 6 months, a year, whenever the time is right, into a VA loan. If that is ultimately the best one at the end of the day with the best rate, we could always refinance into it later. So, but yeah, as a broker, like I said, I have access to almost every single type of loan program, and so we'll be able to have those discussions, do a thorough review of everything, and make sure you're getting the best deal.
How important is one's credit score when applying for a mortgage? And do you have any tips for improving your credit score?
Yeah, especially outside of a VA loan. credit score is very, 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 very important. Outside of your income and your debt to income ratio, credit is right up there, right? And I guess you could argue it is the most important factor because you can make $1 million a year, but if you have a 300 credit score, right, you can't qualify for a mortgage, right? So I would argue that it is the most important factor. And this is where, we'll sit down. We could even start off with a soft pull on the initial discussion. It's not like you have to do a hard inquiry on your credit. We could start off with a soft pull, go through it, see what debts are on there, see what you could trim off, see how we could, help you get your credit score up depending on your specific scenario. But I would say one high level general recommendation that I could give to everyone right now is keep your credit card balance under 30%.
Mm.
Okay. That is one thing that they look for. So if your max credit limit on a credit card is $10,000, you ideally don't want to keep a balance above 3,000. That's one thing that they look at is 30%. That's a big trigger number right there. So that's one thing. But I would say have a credit card. It is important. You want to be responsible, but it is important to build credit, right? If you go in, and I've had some people in the past say, "Oh, I don't even have a credit. I don't have a credit card. I pay everything cash because I don't want to get in trouble." And although I appreciate and respect them wanting to be financially sound by not going and just swiping away, uh, right now there's $1.21 trillion of credit card debt. So you want to make sure that you're not getting in over your head. But it is important to have a credit card. It is important to pay it on time to build your credit.
What advice do you have for buyers who are self-employed or have non-traditional income?
Yeah. So as a broker, I have a lot of self-employed um, income loan programs, right? And for example, right, a very, very, very common one with self-employed individuals are they try and write off as much income as humanly possible, and but then they go and they're like, oh, I showed a loss on my tax returns, but I'm looking to buy a home. Well, great. That's where we have some other programs, whether it's P&O programs, 1099 programs, bank statement loans, CPA letter loans, no income verification loans. We have a lot of options um, for non-traditional or non-QM or non-qualified mortgages, and especially for self-employed individuals. So once again, as a broker, that's something that I'm able to offer, where maybe a conventional bank isn't, right? Because it's just the risk is too high for their portfolio.
I want to transition our conversation to talking about something that's been on my mind recently,
Hmm.
which is
Hmm.
refinancing and long-term home ownership.
Hmm.
In your experience, when does it make sense for homeowners to consider refinancing their mortgage?
Yeah. So a very common myth that I hear is the 1% rule. Oh, well, if it doesn't drop by at least 1%, it doesn't make sense. Uh, that is not true. That's a myth. Okay. I think it depends on where you are, like what state you're in, and what specific closing costs there are for that state, and also your loan amount. If you're going and you're refinancing $100,000 loan, $150,000 loan, and you're in a high closing cost state, it might take you 10 years when running through the numbers to recoup your money at 1%. So you might need even more of a drop. Where if you have a big loan amount, five, six, seven, $1 million, right? A 0.5% could be several hundreds of dollars, $1,000 a month over, right? At a 0.5%, and not even needing to get down to a full percent, right? So I think it's important to have the conversation with a professional, mortgage professional. Obviously, I'd love to have it with you, but it's important to have that conversation to understand the closing costs in your state, and what each 0.5% drop means in rate for you based on your loan amount. That's how you want to make the decision. And you could have multiple refinances within a year, within just a few years, right?
Oh,
Um,
wow.
and
I
I
didn't
think
know that.
that's important. Yeah, yep. You could refinance as many times as you want, right? So if you go down and a simple example of what we try to look at is the time it takes in order to recoup your money, right? So let's just say your closing costs are $5,000, right? And you're saving, $500 a month by refinancing. Great. After 10 months, you're recouping your money, right? So the risk is quite small there. But if a year goes by or a year and a half goes by and you see another drop, refinance again. You're not in the negative, right? You could certainly do that. And that's why it helps not having to try and time the market at the absolute lowest. Because if you didn't time it right the first time, it's okay. You could refinance again, right? And depending on how long you plan on keeping the home, it might not matter if you accrue a lot of closing costs in a short amount of time. If it's a house that you're going to keep forever, and even after your family moves out, you're going to keep it and rent it, it's okay. Over the amortization period over 30 years, you could be saving a lot of money. So it's an important conversation to have, and it's something that it's a conversation I always have with my clients. The break even point and kind of showing a graph and understanding of like, hey, here's where we're at. Now could be a really good time to refinance, right? It's kind of like dollar cost averaging, right? When you're trying to invest in the market, it's impossible to know, oh, when am I going to hit rock bottom for right now? So instead, you dollar cost average, and you stick to a plan. You invest in the market every, on a recurring schedule, once a week, once a month, whatever it may be. And as long as you're consistent with it, you'll catch the highs, but you'll catch the lows, you'll catch the in betweens, and you're never kicking yourself for being like, oh no, I put it in at the top or I didn't put in enough at the bottom. It's okay. Dollar cost averaging is that strategy, right?
I've never heard anyone explain it that way, and I might actually just have to be reaching out to you myself. What are some, again, another one of those selfish questions here, but what are some smart financial strategies for homeowners looking to build equity?
Yeah, so I think um, understanding the market, right, is really or is a great way to build out equity. And once again, it's really tough to be able to go and predict the future and starting, okay, imagine Brooklyn 10 or 15 years ago, right? And it wasn't that much of a desirable area to be in. And now it's booming. There's some apartments that cost more than even being in Manhattan. And so obviously, understanding the markets, understanding being able to take a little bit of risks, or a little bit of risk is great when trying to build equity, because then if you go in and you're like, oh, this property needs a lot of rehab, but you go in there, you give it a lot of TLC and you spruce it up, that could be something that could help pop up the value and therefore your equity in the house. So I'd say that's one thing. And then another one is like working with your real estate professional, right? And your real estate agent, and understanding and getting their recommendations. They go in, they're looking at houses all the time, and they know what sells, right? And that's why I hear all the time, like some listing agents are like, they followed my playbook. I knew doing something as subtle as painting the walls a certain color, or replacing the cabinets before, and so, oh, you're spending 5,000 before listing the house, but now you could sell for 50 more because it looks like you have a brand new beautiful kitchen. Like, sometimes the little things matter a lot. And so that's why not only being in tune with the market and potentially taking some risks, but also working with a professional who's literally looking at homes all day every day and knowing what can help improve values, is another strategy that I've seen help accelerate, people when building their equity.
I want to take this time to thank you. We're getting towards the end of my questions and the time that I have with you. And I want to thank you from the bottom of my heart for coming on, and also my audience for being willing to share this knowledge with them. And to end, I want
Of
to
course.
ask if you could give just one piece of advice to home buyers, what would it be?
Yeah. Other than start sooner, right? And have the conversation now because I don't think you'll regret it. So other than that, because I've said that a few times, um, I would say make sure that you're working with somebody not only on the mortgage side but also on the real estate side. Work with somebody who is going to educate you. I think that is really important to go through the process, know exactly what you're looking for, not just like following, not just being kind of somebody who answers to orders like, hey, I need bank statements, W-2s, driver's license, and here. Why, right? Somebody who's going to explain the why is really important. I think it'll, as you mentioned before, buying a house and taking out a mortgage could be very stressful. And if you work with the right person, they will help eliminate a lot of those stress factors just by giving you the time of day, educating you, and being a sounding board. So I'd say that's a big piece of advice. And then for the mortgage side specifically, I would say to make sure that you are working with somebody that will fully underwrite you. That is a big difference that not a lot of mortgage professionals do, but it could be the difference in helping you get your offer accepted. And once again, eliminating a lot of stress factors once you're under contract is make sure that you are fully underwritten prior to going out and submitting offers.
Jonathan Esposito, where can people reach you if they have mortgage questions or need help?
Yeah, so my personal Instagram is jonathan.m.esposito. So that's a great way to connect with me. My phone number's on there. My email is on there. My personal cell phone is 860-614-2898. So you can always call or text me there if you need anything at all. But yeah, always happy to be a sounding board.
Thank you. And I will make sure to put those links in the description. We got links to Rize Mortgage, but I'll be sure to link your Instagram and put your contact information so people can find it in the description below. Thank you for your time.
Awesome. Thank you so much.